Hope your day's going well. Welcome to Dead Finance, where I share my personal financial journey while playing Deadlock in the background. In this video, I'm going to be sharing the benefits of having a taxable brokerage account and a breakdown of my two accounts, which combined are worth over $100,000. Before we get into that, I must stress that I'm not a financial expert. I'm only sharing my personal financial journey. Nothing in this video should be taken as financial advice. It is simply for entertainment. Please, do your own research for your personal journey, as everybody's situation is different. Now let's get into it. In previous videos, I've gone over my 401k and Roth IRA, breaking down my investments in those accounts and why I love these accounts. The last type of investment account I have to go over is a brokerage account. I would consider a brokerage account to be the last bucket to fill when it comes to investing. The tax advantages of the other accounts provide a tremendous benefit in both total savings and total growth over the lifetime of the account. I would say the main benefit of a brokerage account is that there is no contribution limit. So if you prioritize maxing your other accounts first, you still have an option to continue investing if you are capable of contributing beyond the limits of the tax-advantaged accounts. Another benefit is that there's no limitation on what investments you can own, giving you complete freedom in deciding what you want to be invested in. Outside of that, there's not too much to say about a brokerage account. They're pretty basic. So let's get into my accounts. As mentioned, I have two brokerage accounts, one with Fidelity and another one with M1 Finance. I recently organized both accounts by transferring assets between them. The way I have it set up now is that all of my broad ETFs are in M1, and all of my individual stock picks are in Fidelity. This is due to the way the M1 pie works. If you're unfamiliar with M1, you create a portfolio, or a pie, that is broken into multiple slices. Each slice represents a stock or an ETF. With the pie broken up into slices, you can set a specific percentage you want each slice to represent. For example, if you wish to have 80% of your portfolio or pie in the US stock market and 20% in the international stock market, you would have a slice representing 80% invested in VTI and a second slice of 20% invested in VXUS. M1 will automatically try to maintain these slice percentages each time you contribute to the account. If I were to contribute $1,000 in the example we just used, where it's an 80-20 split, $800 will be invested into VTI and $200 will be invested into VXUS. Now say VTI grows more than VXUS. The percentage of each slice of the pie would change to, say, 85 and 15% split. So next time you contribute to the account, more money would go towards VXUS in order to make up for the change in capital appreciation, such that the overall pie can try to maintain an 80-20 split. I like this setup for my ETFs, given they are the bulk of my total portfolio across all of my investment accounts. Since ETFs are the backbone of all of my investments, it is important that each ETF stays close to the overall target percent allocation. The reason I kept all of my individual stock picks in Fidelity is that my investment strategy has changed over time to where now I mostly contribute to ETFs. By transferring the individual stocks to my Fidelity account, I removed the single stocks from my M1 pie, such that maintaining a balance between those ETFs in M1 becomes much easier. I may purchase more of an individual stock holding if I think they are undervalued, but for the most of my individual positions, they just sit there while having dividends reinvested. I have a few stocks that I started new positions in and will likely be contributing to over time. Most are space stocks. I would consider this Fidelity account my fun investing account. Relative to my total portfolio across all of my accounts, I'm not investing that much into these single positions, and I would consider it my form of gambling. I still try to evaluate the companies and predict if they'll be profitable in the future, So I enjoy the research part, but I understand that investing in broad ETFs is way easier and way safer. So if my gamble doesn't pay off, I'm still setting myself up for success when it comes to increasing my net worth year over year and saving a substantial amount of money when it comes time to retire. Now on to breaking down my specific investments and the total value of each account. For my M1 account, since being simplified, it only has four funds, which are VTI, VEU, SCHG, and SCHD. VTI represents the total United States stock market and is set to be 50% of my N1 pie, but currently makes up 59.1%, with a total value of $37,284. VEU represents the total international stock market and is set to be 20% of my M1 pie, but is currently only at 7% with a total value of $4,458, given it is a newer position and I haven't built it up quite yet, but all of my future contributions will automatically be going towards this slice until it reaches the 20% target. I hope to reach that percent by the end of the year. SCHG is a high-growth ETF, mostly consisting of U.S. tech stocks. It's set to be 15% of my pie and is currently at 16.1%, with a value of $10,177. I have this ETF due to being young and able to take on a bit more risk. I will be curious to see how AI develops over time and if there is a bubble, but for now I'm going to keep this fund. A lot of the current value of SCHG has come from capital appreciation, given I've held it for a number of years now, and it's seen a total growth of 57% in my time holding it. Last is SCHD, which is also set to be 15% of my pie, but currently makes up 17.6%, with a total value of $11,093. This is a dividend growth focused ETF. I have this in my portfolio in hopes that one day I reach a large enough position to provide a fair amount of dividend income for later in life and for retirement, all while the fund's innate value appreciates over time. The total of this M1 account is currently at $63,013. From this point on, I don't plan on changing much in this account, so it's currently just on autopilot. For the past few years, I've been automatically contributing between $250 and $275 on a bi-weekly basis. This comes out to around $7,000 a year that I'm contributing to this M1 account. Now onto my Fidelity account. I currently have 23 single stocks and 3 funds. I'm not going to list each stock, but I'll show a picture of my portfolio with each position and its total value. Feel free to pause the video and take a better look. I have a gold ETF, a silver ETF, and SGov, which is a T-bill ETF, which I'm using to save for a house down payment and also serve as part of my emergency fund. I have a whole video going over T-bills and why I chose SGov to hold my house down payment and part of my emergency fund. The total value of my Fidelity account is $49,182. Of that amount, $20,431 is in SGov, so the total value of stocks in this account is $28,751. I don't plan on doing too much in this account except for increasing my positions in RKLB, PL, ASTS, and possibly BBAI. If I see a stock drop a lot, and I believe that there's still a lot of value in the company, it may pick up more shares, but for the most part, only dividends reinvested will be building these positions. Again, I consider picking individual stocks more risky, so that's why close to 90% of all of my investments are in ETFs across all of my accounts. I only have this account to have a little fun and possibly see a large gain in some single positions, and if some go to zero, then I learn a lesson and accept the loss of money I was already kind of okay losing. Most of these positions are ones that I had purchased years ago and have just kept since. You can also set up automatic investments in Fidelity, where you specify a dollar amount to automatically invest into each position of your choosing. I currently contribute $50 bi-weekly, each to RKLB, PL, and ASTS. I will also start contributing $50 bi-weekly to BBAI, as I want to build up my positions in these companies. I've also been doing periodic purchases of these stocks anytime there's a large drop, as I'm looking for a long-term play. I believe these companies will see a lot of growth in the future as we continue to put more satellites into space and continuous space missions, and as AI is being used more for national security and data collection. Please do your own research when it comes to investing, especially when it comes to individual stock picks. Do not just copy me. This is my plan based on my research and goals. So between both of my brokerage accounts, the total value is $112,195. Of that value, $91,764 is in stocks and ETFs, while $20,431 is in SGov. I still have $15,000 in T-bills through Treasury Direct, which I'm waiting on to mature. The last bill will mature around mid-May. As the remaining bills mature, I transfer the money from those bills to SGov. I also automatically contribute $300 a month to SGov, as I want to keep building my position beyond the T-bills I already own. Well, that should wrap up this video. I've now created a video on each investment account I have. Be sure to check out my other videos on my 401k and Roth IRA. If you are interested in seeing why I utilize those accounts and the total value of my investments in those accounts. My next video will be the granddaddy of them all, where I go over my complete financial journey from when I graduated college in 2019 up to today. I will discuss how I paid off $41,000 in debt and my investment strategy that has allowed me to soon reach a net worth of $300,000. If that video interests you, please subscribe and click the bell to be notified when that video drops. If you've enjoyed this video, give it a like and comment below what type of investment account is your favorite. My favorite would have to be the Roth IRA, due to growing tax-free over the lifetime of the account and the amount of savings that that account can offer. Well, I hope you all have a wonderful day. Take it easy.
Go to base, go to base. Abrams arriving, he's getting knocked out immediately. Where is he? Oh, there he is. I see him, I see him. Nice. Kill this one.